Every borrower thinks they know why they're refinancing, but most of them are asking the wrong question entirely, and that mistake is costing people tens of thousands of dollars. We're talking about one of the biggest financial moves you'll make, and the difference between a smart decision and a disaster comes down to a single question almost nobody asks. The question isn't, what's the interest rate? It's, what is my total cost over the life of this loan? Think of it like buying a car. The monthly payment looks great until you realize you signed up for 8 years and paid twice what the car was worth. There was a moment back in 2021 when rates dropped so low that refinancing felt like free money, and everybody was doing it. Your neighbor, your coworker, probably your dentist. But the rush of excitement around low rates blinded millions of borrowers to the math hiding underneath the surface. Economists and mortgage advisors kept waving flags, but the euphoria was louder than the caution, and just lock in the rate became the cultural consensus. Fast forward to today, and a lot of those same borrowers are sitting on reset timelines, extended terms, and the quiet realization that the savings weren't quite what the brochure promised. The psychological pull of a lower monthly payment is one of the most powerful forces in personal finance. It feels like a win, even when the full picture tells a very different story. Behavioral economists call this monthly payment bias, and lenders have known about it for decades, which is exactly why they lead every conversation with that number. Here's where history gets instructive. Refinancing cycles have repeated themselves across the 1980s, 90s, 2000s, and beyond. And every single time, the pattern is the same: rates drop, volume explodes, and a meaningful percentage of borrowers end up worse off than before. The irony is almost poetic. The tool designed to save you money becomes the trap when you skip the full calculation. One of the most persistent misconceptions is that a lower rate always means a better deal. And that simply isn't true. It depends entirely on how many months of savings it takes to recoup your closing costs. If it takes 48 months to break even and you move or refinance again in 36, you just paid to go backwards. Another myth is that debt consolidation automatically simplifies your financial life, when in reality, you may be rolling short-term debt into a 30-year mortgage and paying interest on a vacation you took in 2019 until well into the 2050s. That's not simplification, that's a financial haunting. The practical lesson from every cycle is this: before you sign anything, run the break-even analysis, know your number, and ask your lender to show you the total interest paid over the full term side by side with your current loan. Disciplined borrowers don't get excited about rates. They get excited about verified outcomes and verified math. Position size and patience matter here just as much as they do in investing. Meaning, don't over-leverage your home equity chasing a marginal rate improvement, because the cost of being wrong is sleeping in the house your mistake is paying for. A measured, unemotional process will always outperform a conviction-driven reaction to a headline rate. The broader truth is that the mortgage market, like most financial markets, runs in cycles. And the best borrowers aren't the most sophisticated, they're the most disciplined and the most honest about their own timelines and goals. Community wisdom on this one is actually pretty solid. If you can't clearly explain why you're refinancing in 2 sentences to your spouse or your mother, you probably don't understand the deal well enough yet. At the philosophical level, good borrowing is less about getting the best rate and more about making a decision you can live with across a range of outcomes, including the ones you didn't plan for. Discipline, proper sizing, and consistency in your decision-making process will beat clever timing every single time the data is run. And here's the comforting part. You don't have to be perfect. You just have to be rational, stress test the numbers, know your break even, understand your timeline, and you're already ahead of the majority of borrowers making this decision every day. Whatever the market does next, a borrower who asks the right questions first is never the one left holding the short end of the stick. So the next time someone pitches you a refinance or a consolidation offer, slow down, pull out a calculator, and ask the one question that changes everything. What does this actually cost me from today until the last payment? That single habit, practiced consistently, is worth more than any rate you'll ever be quoted. If you're ready to make that move the right way, we can help you get started, whether you're exploring real estate investing, need home contracting work, or want to connect with the right lenders. Check out our links in the description below.